market. Rotimi, thank you. Always a pleasure to have you on the show. And then the market watchers I've been speaking to, and I've been asking them to tell me what direction this market is going. Is there a plan? And I know right now we're obviously waiting for a catalyst to come in to spur our investors, but we have been seeing some decent, bargains at the market. But how are you reading this market right now?
My perception is concerning the release of any results. We've seen unaudited coming from some companies, some banks as well. But to me, I think it's a quick departure from what we used to have before. And I think the kind of expectation that people are looking forward to is not really what is coming out to be. I would have preferred a situation whereby we wait for the auditor report of the financial year end for some of those companies. Now, also, there is some reservation whether there could be a drop in the usual dividend payout of some banks. So such speculations are actually affecting the bargain for for stocks in that sector. So until we get one result from the banking sector stocks, and it may be slightly higher than what they paid last year, or just about the same quantum, then that way, I think there will be another revival in the market. But for now, we'll continue to see what we are seeing presently. But for me, I think for the year outlook is still very positive, because I think a lot of things have really changed, like I always mentioned concerning the early passage of the appropriation bill and signing it into law. And also maybe at least when we begin to see implementation, then definitely we're going to see a departure from what we used to have before. And that also will instigate a lot of positive movement.
It's funny you mentioned that, because I remember I asked the market watcher yesterday if he thought investors were bullish on the economy for this year. We've seen a number of policies, right from towards the end of 2019, and we're expecting to see the benefits or the effect, as it were, of those policies taking shape this year. Obviously, you are bullish on the economy, but I'm just wondering, is this a pervasive sentiment at the market? Investors trying to focus on the economy and prospects of it getting even better, gaining more momentum, while they stay at the market?
Maybe just a quick diversion from your question. One of the major challenges within the economy has been the security apparatus of Nigeria, and I think with the kind of development we'll be getting, the regional security arrangement that is coming forth, which everybody believes is going to be more effective, more than what we'll be having with the Nigerian police, the DSS, and all the likes. I think that also will be a catalyst to the expectation of people concerning the 2020 economy of Nigeria. But be that as it may, I still want to believe that the market, as it were, is still underpriced, vis-a-vis the dividend yield coming from a lot of companies, vis-a-vis the exchange rate, and also the prospects that lies ahead because of the slight restructure, or unsound restructuring that is taking place within the system.
As you know, this economy is one that relies heavily on oil, or oil revenues from oil sales. Yeah. And right now we're seeing oil prices at very low levels, $53, $54 is the range we're seeing now. We have an oil benchmark in the 2020 budget at $57 per barrel. So how concerned are you as a broker? How concerned is the market in terms of how this could potentially limit the ability of the government to embark on some capital projects? I'm talking about spending for the year. There's already a budget deficit. We know that there's one or two major borrowings on the table. But overall, if this persists, I'm just wondering how investors are going to begin to convince themselves or give that strong business case as to why they should seek shelter in a risky market.
I think looking at that critically, that is a huge concern. And at the same time, we've seen some moves that the government is seeking to actually boost internal revenue generation. Maybe one of such is the increase in the VAT rate. For me, I think that shouldn't have been, but I think with the urgency with which they are standing to actually raise something, it's quite, it may be a welcome idea in the interim. But at the same time, I believe that the reason why we have seen a major and sharp drop in the oil price has been the coronavirus issue, which has limited the intake of oil by the China economy. But I think if there is an improvement in that aspect, then definitely we may begin to trickle down to our economy. But all in all, that $57 benchmark was irresponsible from the start. Though that position had already
You thought
been
it should have
taken,
got higher, lower?
should have been lower. Should have been more conservative in our approach. But it's already taken. What we should do now is, or what definitely will happen, is going to be more borrowing. And in the implication, the later implication of that is definitely not going to be to our advantage. So I think foreign investors, portfolio investors are actually taking a look at this and the multiply effect on the economy. But at the same time, I still see a positive outlook. It may not really be based on anything, but I think with trend that we've had in the past,
Okay.
I believe something good may still happen.
Rotimi, I must thank you for your time today. Thank you for talking to us. Thank you indeed. Rotimi Fakayejo, stockbroker and capital market analyst, is sharing his thoughts on the market development.